The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We want to send out some good wishes to one of our dinners up in Alaska. He's in the middle of that earthquake. So, Steve, if you get this message and you're listening, let us know that you're okay. He came down last year and had dinner with Arch and I, and a really nice fellow, a retired fisherman. But, boy, that's a pretty big earthquake. Regarding earthquakes, I was in, well, quite a few of them during my time, my 25 years I lived in California, but the one that I remember the most was in February of 1971. It was a 6.6, which doesn't seem like much, but it was in the McCulloch Oil Building where we had the Conti Commodities offices. It just opened, and I was sitting there looking at the board. It was really early in the morning, and they were just starting to see some things come up because we didn't have all this, you know, overnight stuff, and the building actually started to shake. I mean, it was really, I mean, you're on the 20th floor, which is the highest floor, and you're looking out the window at UCLA, and you're watching it move back and forth. That was my first time in an earthquake from an old Indiana boy, and that was flat out scary. But after that, all the earthquakes we had made a lot of noise and, you know, broke a few dishes and stuff, but there was nothing, you know, really bad about it. There was actually something good came out of it because I had just moved from Indianapolis back to California after my stint with Eli Lilly in the home office, and I was looking for a house in Westlake Village, and the house that I was looking at was offered for sale at $38,000, and I bought it 2 days later for $32,000, and it was really you know, a pretty good deal. Anyway, earthquakes are pretty bad. I've sat through several hurricanes and typhoons during our time in China with Sarah in Hong Kong, and 7.9 is really huge, and the largest earthquake that we've had in California in recent times is 1906. That was the San Francisco earthquake. I believe it was 8 something, and that, as you know, that really destroyed everything. In fact, that was covered very heavily in the book by Jesse Livermore, by Edward Lefevre, and that is Reminiscence of a Stock Operator, because they didn't realize how bad it was. You know, the news, you know, had traveled very, very slowly, you know, from East Coast to West Coast. Now it's milliseconds, but, you know, it's really interesting because it took quite a while for them to realize the you know, the problem with the earthquake, and the market eventually went down into that. And I believe there was a crash around that time, but whether it was due to the, let me see, whether it was due to the earthquake or not, I wasn't trading it in 1906. I didn't start trading until 1908, as I recall. Okay, boys and girls, let's look at the first chart here, which is the Bitcoin. Unfortunately, I don't have the DAX chart up today, but we'll start out with the Bitcoin. We're now trading a little below 10,000, I understand. Remember, this big ABCD pattern that we have here measures to just a little below 9,000. You know what I mean? It's really got a chance to get that big ABC down there. It doesn't have, I mean, it's trading very, very normally, folks. It really is. Doesn't show any signs of a bubble. Bubble shows gaps and really wide ranges. If we were to get that down here now, then I would say, yes, it's a possible bubble. But we can go all the way back to below 5,000 and still be in a bull market in this thing. You just don't really know. And we're going to have John Jameson on at the break, hopefully, and he's going to talk to us about this new technology that is out there that seems you know, to be something really good, called Lightning Network, which is a way of making the internet and blockchain stuff, you know, really good. Boy, it's so hard to believe all the stuff we see going on in here. One of the questions that someone asked in the den today is when these markets, run like they do in the like we've seen here in these indices since January, beginning of January. How do you handle that, folks? If you just look at it from a watch intraday, because there are corrections, even though they're very, very small. Yesterday we had two 5-point corrections in the S&P, and of course it went 20-some points higher. So those are pretty substantial corrections, in the S&P as it's running. I'm not involved in that. I have a hard time, trading those big ones. But it's just one of those things that I do better on the short side sometimes than I do on the long side. But I miss this puppy, and it's gone far, far greater than I ever thought it would go. But I'm not alone. A lot of people have had it. Fortunately, gold and Treasury bonds have been pretty good to us. And regarding the Treasury bonds, we talked about that yesterday. I know. Well, the earthquake did a lot of damage, to broken water lines and stuff. But the fires, you're right. The fires were what really destroyed it, because the gas stuff was really bad, and the hydrants. You're right. The hydrants were broken because of the earthquake, and that prevented the water from coming in. But when you see pictures of it, of Market Street and stuff in San Francisco, it's really bad. When you look at that city today, it's really something. We have relatives that live there, and they work at BlackRock. And out of San Francisco, and they travel the BART each day, and we always wonder about, if they have another big, and they will. These earthquakes come all the time. Folks, just talk about earthquakes just a little bit, because I was really interested in the work of Edgar Cayce from the. He was known as a sleeping prophet. For some reason, I got interested in that way back in my college days. So I went back to Virginia Beach and looked at some of the stuff that they had there in their beautiful library. And one of the things that he had talked about, he said that the real problem with the planet Earth will come when we have these earthquakes along the Pacific Rim. There's earthquakes, either underwater earthquakes, or above. Volcanoes, but there's a Pacific Rim there. So when they start having earthquakes or volcanoes along the Pacific Rim that stretches from Alaska all the way down to Mexico, I think there are 8 key spots. He said when those start to go, that's when the real problem will come with the Earth, and the shifting will come and all this other stuff. But here again, you'll see that we'll have a pretty interesting spot here to see what's going on. We're noticing here that Mr. Z is telling us that natural gas is moving really sharply higher this morning. We'll cover that after we get back from the break and take a look at it. And we will have John Jameson as our guest, hopefully, at the break. I've got a call into him, so hopefully he gets pretty busy at times. So hopefully he's going to have time for us today, and we'll be able to take a look at it. But we'll get this chart for the natural gas for you folks coming up here, and we'll talk about it right after the break. I'll get it put in here, and then we will. Where are you, natural gas? There you are. And yes, it is breaking out. It's right up at the 1.618 now. We'll take a quick look at this. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the natural gas. As you can see, we opened this morning and it's had a really strong run. We're almost at the 1.618 expansion of the ABCD leg. And if we get above that 1.618 expansion, we can certainly run a whole lot higher because, as we know, that 1.618 number is the number of last resort when you're looking at these patterns. So watch it closely if you're in that natural gas, because if we can pop through there, it can easily go another 10, 15 cents or even more, because you would have a multiple ABCD pattern, you know, finishing at probably around this 360 level, which is 20 cents higher than what it's trading right now. If we take a look at this natural gas here on the weekly basis, you're going to see the beauty of the patterns that are here. If you'll notice this natural gas chart, when it's made a high, you'll see the perfect ABCD pattern measuring up there at that 635 level. It was also, you can see the butterfly pattern that was there. You were making a 1.414 expansion off of the high from 2011, and you were making a 1.27 off of the high in 2010. So there were a lot of things saying that that was the top. But let's look at the natural gas at the bottom here. You'll notice it had the big break from 640 down to 380, and then it rallied up to 455, made a big ABC to the downside. And take a look at the time period on January the 16th of January of 2016. Actually, it's February of 2016, with a little red box I've got marked there. You can see the three drive to a bottom pattern very quickly, and that's clearly, and that's a very nice three drive pattern on the weekly chart. That's really highly significant for a bottom to come in, and of course it bottomed down there at around the 165 level, and then proceeded to more than double in price. Then it's been going sideways for quite a while here. That's why you can see here, once we pop above, you know, the 350, 342, 344 level, you know, we can easily go up to even as high as 455. That would be nothing more than a 61% retracement of the whole move from 2013. So that's it. What's really surprising here is that when the weather was really cold back there, the natural gas didn't even move. It was not responding to the fundamentals until later when the when the weather got warm. And that's one of the reasons why I'm a technician, because you don't have to worry about any fundamentals. Just look to see if there's more buying, prices are going up. If there's more selling, prices are going down. The gold market is an interesting one here because we're in this really tight range up in this 1345, 1325 area. The biggest correction we've had since this thing started, when we had a $108 move, has only been $20. I'm still assuming that there's a possibility here that we could get to a spot where we might be able to get the gold at a really interesting price, but we'll just have to be a little bit patient on it. That's all I can say. We're trading around 1331 right now. We'd like to see that ABCD structure come down to around 1311 to $20 from where we are right now. So let's keep that one on the back burner and take a look at it. But one of the things that I wanted to focus on this morning here, if you'll give me a second, is this Treasury bond market. 1 second, please. Let's just get this chart up here, the Treasury bond, so we can all see it together. This is what we were looking at yesterday. We were talking about that move down around the 148 level. I think the low was 148.16, which was spot on the 78% retracement of the low from back in March. Now we're having a little bit of a rally, but very, very minor. There's a 3-drive pattern there also, so there's a lot of ratios and patterns coming together here to say that the bond should hold this level of 148. But longer term, they're so bearish that it's really difficult to try to make a case for a really strong bullish move over a long period of time, because the charts are so bearish on the longer term. I mean, they're just horrendous. Now I know we'll put the notes up here to look at it because we're at the same level here. Get this level here in the notes. We are extremely oversold in notes and bonds. In other words, there's a rally due in some of these things, but we'll have to give it a little bit of time. If you remember, we talked about this yesterday, and that was about the utility index. The fact that the utility index had not broken below the 61% retracement. This has been the weakest of the 3 Dow components. You'll see here, that's where I think we got a shot at 27,000 today in the Dow. Well, it wouldn't be today, but we're only 700-800 points away, because maybe we could get it. I don't know. But anyway, you'll notice this utilities chart going back a couple of years. You'll see the retracements. Each one of them was exactly 61% retracement. We've got that gap up there, which you almost never see a gap in the utility index. And so it tells us that this 3-drive to a top pattern that we had in December is most probably it for the utility index. The transportation index continues to scream higher, along with all the other of the big Dow stocks. And we made new highs in just about, we did in every index yesterday. We made new highs in the Dow Jones, E-mini S&P, E-mini Dow, and E-mini NASDAQ. I wanted to answer a question from one of our listeners that sent in by phone. I'm going to put this up here, folks. This is the chart of the open interest. Let me get it up here so we can look at it together. All you have to do this, your work yourself, it's very, very simple. There's your daily equity volume and open interest. And you can see, you can mark whichever one you want to watch. But you can click on, the agricultural, energy, whatever you want to do. But if you look at the first one, which is the Bitcoin, you see the Bitcoin futures, and you go over there, and it tells you the open interest is 1,519. That means 12 people got out of their positions on Friday. That means it was they just liquidated the position. Now take a look at the Russell E-mini down here. That's the second largest of the indexes traded. First is the S&P trades. You see the open interest there for the Russell is 5.4. The open interest for the E-mini S&P is around 3.4 million. So it's 6 times bigger, and that's the second largest one. The weakest one, of course, is the Dow Jones Industrial Average. That's the weakest, and then the second one is the NASDAQ. So it's first is the Dow Jones, second is the Russell, third is the NASDAQ, and fourth is the Dow Jones Industrial Average. So keep that in mind. But you notice the Russell E-mini had a drop in open interest yesterday of 3,900 contracts. That means that 3,900 people covered their short positions. And the reason we know that, if prices go up and open interest drops, that means there's short covering. That means there's no new buyers coming into the market. However, if we looked at this chart, you'll see, and I use the words of my good friend Jim Twentyman, defy human nature. Go in and do this yourself. Take a look at what happened with the S&P. It increases about 10 to 15,000 open interest every single day. So only one of the indices, the big one, the S&P, is increasing open interest, which is not a sign of a top. That's basically what it looks like. That's as simple as I can make it, as we see here. Hopefully we'll have John Jameson on here at the break. So far I've not been able to reach him, but we'll see. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got our good friend John Jameson from the Jameson Letter on the line. John, are you there?
I am, Larry. Hello, how are you doing?
I am good, my friend. How's your weather over there?
Today, believe it or not, I can see the sun. How about that? First time.
Wow.
First time in about 4 weeks.
Yeah, that's not, well, you get it once a month, I guess, right?
That's right, yeah, absolutely. Just get the vitamin D, stops us getting rickets, Larry.
Oh, there you go. Hey, John, I have a A simple question for you. You know, we were talking about this, and one of the reasons why I wanted you to come on the show is you were explaining to me about this new thing that has come out called Lightning Network, and I posted the chart in here to the folks in the den. Could you explain to them, this is all new, explain to them what this is, if you could, please, what Lightning Network is about?
Sure. Well, the non-technical explanation is that Bitcoin has one big problem, and that it's not scalable. And the reason for that is just the way that it's coded. It has this 1 megabyte storage limit for transactions. And what that effectively does, the non-technical reason, is it limits a number of Bitcoin transactions to around about 7 per second, which is obviously too slow for anything like real-time transactions. And if you compare that to the Visa network, then they, I think, currently process 4,000 transactions per second. So 7 versus 4,000. Now, Visa can do many more than 4,000. I think Visa's coded up to about 65,000 transactions per second. So what the Lightning Network does is it's a new layer that's away from the blockchain but interacts with it. And it allows people to transact in Bitcoin and themselves, and it greatly speeds up the access to it. So in other words, it gives Bitcoin the same sort of speeds that Visa is attaining. So that's the simple non-technical version. Okay.
Okay, the question I have, and what someone else in the den has just asked, is if someone has something like this, why they're even talking about it? Why wouldn't they just keep it to themselves?
Sounds to me everyone's a conspiracy theorist in the den.
Well, just a chubby little Italian here in Tucson. But that makes sense to me. If you have something that's really good, you know, why share it? And
well, the whole point is the Lightning Network is open source like Bitcoin is, and it's a way. Last summer, when we did our presentation, in fact, part of that was talking about the hard fork that was going to occur in Bitcoin. Which got cancelled at the last minute, and that one of the reasons for that hard fork was that they were going to change the block size in Bitcoin. This is a way of giving the functionality to Bitcoin that is its main throttle back, if you like, which is the speed of transactions, without having to change the blockchain itself. So this is open source, and really, if anyone's interested in learning exactly how these things work, if you just go and Google Lightning Network white paper, then you can download the PDF and enjoy hours of endless fun reading it. Some of these things are technical, but some of them are actually quite easy to understand and read. And this is just a way of making Bitcoin faster. And what that does is that one of the big criticisms with Bitcoin is the cost of transaction fees, which have gone parabolic over the last few months with the rise in Bitcoin. And that's a problem. You know, it went from a few cents to do a transaction to, you know, tens of dollars. And that doesn't sound like much, but all of a sudden, yeah, that's a serious move. So the Lightning Network is an attempt to solve that. Well, it isn't an attempt. It's a technology that solves it. So now the question is, how long will it be before it is, you know, used by the masses? And what I shared with you was the genesis of the Lightning Network in transactions. And it's hardly anything going through it right now, but I think that this will be the future of Bitcoin. That's my opinion anyway.
Okay, now, one of the questions that we're having this morning is, you know, we have so many people watching TV, Bloomberg and CNBC and BBC, they talk about the bubble in Bitcoin. Are you of the camp that it is a bubble, or you believe that blockchain is, I know the answer, but that's a question that they asked.
Well, what are you watching Bloomberg and CNBC for? I'm kidding.
Well, I always I get the Forex prices.
No, I don't believe it is a bubble. And in fact, if you took the time to do a log return seasonal graph on Bitcoin, which I just happen to have done, you'll see very clearly that Bitcoin's behaving basically the same as it does every year in January and early February. And I'll be posting that seasonal chart in the Jameson letter this week. And so anyway, that's that. Also, you know, is Bitcoin under pressure right now? Sure it is. And I'm in fact expecting lower prices. And we discussed this, you know, Certainly 8,000 is possible for sure, especially if that low breaks down. So I don't believe it's a bubble. I think that we're going to go down and shake things out. And the reason for that is because we've had a lot of fear in the background. Obviously, you know, the mainstream media is having a field day, Bitcoin bubble, et cetera, et cetera, et cetera. There's massive fear. You know, it's a multi-pronged fear campaign. The IRS, and that is a talkable thing. So that's a discussion about the IRS taxing every single transaction as a tax event. So, for example, buy Bitcoin, you know, sell Bitcoin, buy Ethereum, and if you make a profit on your Bitcoin, that is a taxable event. That's something to talk about. So we're being bombarded with fear, as well as countries like India, Indian banks not transacting in Bitcoin, South Korean government restricting access to Bitcoin. So all of this all adds up to, you know, the only way is down. You know, oh my God, sell up. Well, if you ignore the fear and actually take a look at what's happening behind the scenes, Bitcoin's doing okay. It's actually doing ABCD patterns really, really well. We had a bounce. It's actually failed, but we had a fantastic Gartley last night off a 786. If you noticed that on Bitcoin against US dollar, and I'm expecting weaker prices for the next few weeks, and then we'll see. There is a catalyst that I'm waiting to happen in the markets, and if I have time to talk about that after the next break, then that's great. But there is a catalyst that's going to kickstart Bitcoin, I think, later on in 2018. I think we're a couple of months away from it, though. That's my opinion.
Well, we'll certainly want to have you on after the break, folks. I've known John for over 15 years, and we started talking about this months ago when Bitcoin was under 5,000, and he said then it was probably going to go to 15. Well, he was certainly wrong. It went to 20. So we really want to listen to what he has to say here. You're right, John. It is acting as technically as beautiful as gold or crude oil or anything. I mean, it's just a beautiful technical picture, and that tells us that there's a lot of people involved, and it's following the natural order of patterns and Fibonacci numbers. So I think if we keep watching these, there might be some, you know, opportunities. Hopefully, it'll be easier to trade. I mean, to see that the CMEs only has a 1,500 open interest after 3 weeks, that's a big surprise. I would figure it have been close to 3,000 to 5,000, but it's a very slow start. And I think part of it is people are just confused because, boy, it's not like growing an ear of corn and you know where you stand. There's just too much involved here. And that's how money is made, is the unknown. So.
Sure. Well, you know, it's interesting, too, that talking about the Bitcoin futures, that they're settled in cash. So making Bitcoin more dependent on the US dollar, I guess, not settled in Bitcoin.
All right, we'll take a break here. We'll be right back with John Jameson of the Jameson Letter, folks. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with John Jameson from the UK. John, do you want to continue on with our discussion?
Sure. Well, yeah. I mean, we were talking about the futures before the break, and to keep talking about the futures, you were mentioning open interest, and that sort of leads me to the question: do we have a commercials market in Bitcoin? And if we do, who are they, and how can we use them?
Mm-hmm. I don't think we have that yet, because the commercials are certainly not with 1,500 open interest. The open interest should be approaching somewhere around 5,000 after the first month, I would think. In fact, we had a drop in open interest yesterday. It was only down 12 contracts, but still, that's not a very good start from the futures standpoint. But I think part of it is that people are just absolutely scared of the unknown, and there's just so many factors that are here that people. I personally am confused by it, because I'm not technical, of course, but with all these different things, and it's not cryptocurrency. It's about blockchains, and that's a totally different environment than just cryptocurrencies, isn't it?
It is. So going back to the discussion about what you've just said, that's correct about the amount of open interest in the futures markets. But let's see if we can have a proxy for the commercials. And in the Bitcoin world, the proxy for the commercials are the miners. They're motivated to uncover new blocks and get paid in Bitcoin. And what miners normally do when it's profitable to do so is they mine and then sell their Bitcoin. So if you look at the chart of Bitcoin and you look at the low that came in on the 22nd of December, that came in on, I use a very simple chart. It's basically a candlestick chart with normalized volume, and that's volume normalized against a 50-day simple moving average. It's very, very easy to understand. So on that day, we had a 300% reversal candle on 300% volume. We had an ABCD pattern out of that. And then prices reacted back down again. We did completed a larger ABCD pattern, one-to-one ABCD, back down into previous buying, and we had a 220% volume reversal candle on that. And we're currently testing that reversal tail. So the question is, what was the difference between the low on December the 22nd and the low on January the 17th? And the answer to that was the miners by the second low, but on the first low on December the 22nd, the miners were still selling, and therefore, when they're creating the coins they're selling, they're creating the overhead supply. But by January the 17th, the price decline was such that it was no longer as profitable to do so. So if miners stop selling, then it makes sense that they're removing the overhead supply. So if Bitcoin can't rally and can't basically, if a peak can't get into the price range of a previous trough in the same leg, when that happens, then I'm still expecting lower prices, and therefore a test of that 9,200 low that we put in a few days ago. So although we don't have a true commercials market, I think it's really, really useful to be able to look at and ask the question, what are the miners doing? and that you can do.
Boy, you know, what you just described is a beautiful technical picture. You're looking at the technical nature of what the chart is telling you, and then you're adding the fundamentals to it. So that's really a good thing. John, I want to thank you for coming on today, because I know you were really busy, and I had a question about this Lightning network, which is really interesting. And you just say you'll have to go to Google and just Skype in Lightning Network white paper. Correct,
and you'll have a look at the technology behind it, download the PDF, and have many hours of light reading. No, it's actually quite straightforward. So yeah, do that, and it'll give you a little bit more information.
How new is this Lightning Network stuff, John?
It launched on the 18th of January.
Really? So this is really the infancy of it, right? We'll have to take a look at it. Any particular vehicle you're looking at as far as how you can make money on it?
Well, the key is basically to look at the coins that are potentially going to start looking at using the Lightning Network, such as Bitcoin, Litecoin, etc. So yeah, that is one of the keys, and that's one of the things I'll be discussing in the Jameson letter for sure.
Okay. Well, listen, thanks for joining us, my friend, and Happy New Year to you, and we'll have you on again soon.
No worries. Thanks very much, Larry. Great to be here. Take care.
Thanks a lot.
Thank you. Okay.
John Jameson from the UK, and we'll be watching. Boy, I'll tell you, when I listen to this stuff, the gray matter, that quarter ounce that I have up there, is certainly spinning around, because, boy, I had a hard time with the internet when it was WWTTP or whatever it was. I mean, I did remember it was Hyper Transfer Protocol or something on that. But anyway, we say it's the internet squared, but it's certainly the wild, wild west as we're looking at it. Let's take a look here at the euro, boys and girls. 1 second. Terry, I don't know the answer to that question, but they are using a lot of these companies are looking at blockchain stuff. I know Google is, because I had a friend that worked on the Google program for cryptocurrencies and blockchain. So, and we know that Eastman Kodak and a lot of other companies are too, because the computers are here to stay, believe it or not. Anyway, let's take a look here at the euro. We were watching it with this big ABCD pattern that we had over the weekend. You'll notice that we got up to that 123 and change. We're now trading at around 122.40. It hasn't backed off very much, but from that level, we should react at least another 100 pips lower, taking us down to that old high at 120.90. That's the main thing that we want to keep an eye on. That's the old high where that 1.27 expansion came in. That would be very, very important from a technical basis. The other thing that I wanted to mention, if you'll give me 1 second here, is I wanted to get this. Okay, let's just. John's letter has not come out yet, folks. It's going to be very shortly, probably around the 1st of February. It's a video newsletter. He's going to be showing the charts and talking to you, so you won't have to read it, which is even better. So we'll want to keep a close eye on that. Here's one that's really interesting, folks. Take a look at this chart on the British pound. This has defied, gravity. Well, it's very, very nice technically. You'll notice here in the British pound when we broke out of that triangle, and the important part is you'll notice it stayed there for about 7 days at that 135 level, and then had the big move up. Well, right up against that 1.618 number now at the 140 level. The overnight high was 140.03, and above that we're going to be looking at 143.40. So the U.S. dollar is still under some strong pressure here. If we get this euro above the 123 level, it's Katie bar the door, because above that you're looking at 127 to possibly 130 in the euro, and that's going to take the U.S. dollar index way below 90. And as we've said many times, that key support at 90 is just really important, because the weekly chart of that dollar index is still down and it hasn't rallied very much, and the euro hasn't backed off very much. So This is a very interesting time, and as we come into January, this is where we start to see big moves in these foreign currencies. So let's pay close attention to us. We also have to pay close attention to this this corn and also some soybeans. But I want to talk about the corn when we get right back. 877-927-6648.
Achievers rise above the rest, and when they see an opportunity, they take action, massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, here's the December corn. That's new crop corn, and that hasn't even been planted yet. So we're watching this very, very closely because the cost of production on this corn is right at this 340 a bushel level, and yet it's trading below that when you add in all the different things that happen with the grain elevators. So we really want to keep an eye on this corn as we come into this, because if we get a nice little 3-drive pattern or something here in the corn, it's going to be, very, very interesting. Folks, I frankly, I don't know anything about blockchain or stuff. You're asking me questions that I'm not able to do, I'm not even sure microwave ovens are here to stay, but it's the wild, wild west. I do understand the charts. I I do see the patterns, but frankly, it's going to be interesting to see, what happens with this. We almost made a new high in the S&P here this morning after, dropping well over 15 handles, which is 3 harmonic numbers down. So we haven't had any major correction here in so long. It's a question of whether we're really going to have one ever. That's usually when it comes in. Watch the euro very closely. We're trading here at the 122.68 level. If we get above that 123 level, folks, that's got a chance to have legs. So the dollar index would be failing, and that would be something you would be watching. Also, the British pound. I posted that chart into the room, and you'll notice that it's got every chance to be incredibly strong if it gets above, the 140.20 level, which is about 40 pips away from where we are right now. So those are the ones that look the most interesting. We're still waiting for a really good correction in the gold market down around the 311. That's about $21 from where we are right now. And I think that would be a place to really look at it. That's the 382 of the whole move. So we're still waiting on that. Silver's a little weaker than gold as usual, but the price has not reached the level. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!